In one of the most unexpected fintech plot twists of the year, Chimney, the cross-border payment startup that announced its shutdown just 4 weeks ago, has signed an acquisition deal with Capital Sage Holdings in a turnaround its founder says was powered by radical transparency. Meanwhile, Kenyan's Finance Bill 2026 is threatening to dismantle a homegrown manufacturing success story with proposed tax changes that could erase the cost advantage of locally assembled smartphones, putting M-KOPA and Sun King's Nairobi assembly plants squarely in the crosshairs. And a new visa study reveals a striking paradox in Egypt's AI adoption story. 91% of consumers use artificial intelligence to guide their shopping decisions, but fewer than 4 out of 10 trust it to actually complete the transaction. This is a trust gap that has major implications for the future of agentic payment across Africa. These and more stories on tech and innovations in Africa. Welcome to Tech Tides Africa podcast. This is Karen, and this week I'm coming to you from Laikipia. I am looking out at grass and trees, and I'm listening to birds. I have no desire to go back to the city. I don't know about you, Kelvin. How has your week been? Where are you?
I mean, it sounds very peaceful over there.
You
um,
will not hear Boda Boda or Okada today.
ah, I mean, that's a good thing. Better to be hearing birds than border borders. But I'm doing well. It's been a very wet week, I should say, because it's just raining constantly over here in Port Harcourt. But I'm with family, so I had a good weekend. I had a good week previously, and I'm doing well. Another week, a cold morning to start with because rain was falling during the early hours. So can't take my what has become a regular morning walk now.
Yeah.
I told you a while ago that I've been doing morning walks and
You're
I've
trying
actually
to be
continued
healthy.
it.
Wow,
Yeah.
awesome.
So yeah, I'm doing well.
So now only the blankets are calling you. All
Yeah.
right. We start our stories in Egypt today, and it's quite similar to a story that we discussed a few weeks ago where we were talking about AI adoption in Nigeria. And this week, there's a research that has been done by Visa and Wakefield. It's a study across 17 SEMA markets that found that 91% of Egyptian consumers are using AI tools to assist them with shopping. So they're comparing prices, they're reading reviews, they're finding gifts, but only 38% are trusting an AI agent to complete the checkout on their behalf. And we're seeing this across other countries. In South Africa, that trust figure has it drops to 23%. In Kenya, it's at 29%. I don't know how it is in Nigeria, but there's clearly infrastructure for agentic commerce, autonomous AI driven transactions. But then we're seeing consumer trust is still quite low. So are they building too fast? Begs the question.
I mean, it sounds like most people that are shopping online are me because that's also something that I would do. I think a couple of weeks ago we talked about it on the podcast. As much as I'm a big lover of tech innovation and things like that, I'm not at that point where I would trust AI to do shopping for me. I always want to see. I guess I want to complete that final step so I can do the discovery with AI, and then when it's time for payments, I make the payment myself. And I see that this is reflected in the data as well that came out from this study. Trust is always something that you have to wrestle with when you're building solutions in Africa, right? It's always just one of those things, especially when it comes to getting people to trust the technology. It's quite hard. I mean, I'm not surprised. The data is clear. If anything, maybe the numbers are a bit higher than I would have thought at this stage because it's still like maybe a year or two into autonomous agents. So the technology is there, but the trust isn't there yet. So us Africans, you have to give us a couple of years. Let other people use it. And then when we see that the technology is quite stable, gradually you start to win people over. But for me personally, I would always make that final decision. I can't really see myself. I can't really see myself letting AI do the entire process. I would always step in at that final step. But maybe that's just me.
Yeah, you're making some really good points. As Africans, we take our time. And we've talked about cybersecurity on this podcast several times and the challenges that we are seeing now. If we feel our money is not safe in banks because they are being hacked, let alone AI, my friend, if I could, I would put all my money in a safe underground. But we're seeing 36% of the Egyptian consumers have reported experiencing a financial scam in the last 12 months. A couple of weeks ago, the company that I lead, Leash AI, we were doing a webinar on social media, cybersecurity safety while using social media, because we're seeing more and more people being hacked on WhatsApp and on their social medias. There's a lot of hacking that's happening. And I think that is leading to the distrust that we are seeing. And you've said something that's quite important for anyone that's building on this kind of technology or infrastructure. It is to make sure that, number one, you certify the AI transaction with meaningful agentic programs. You have to allow the buyer to have the last say, where the last step they're able to either choose to complete with AI or choose to complete it themselves. I think that's something that it can't just be a checkout button and then AI does everything. I think human intervention, people still need to feel that control for now. I also do think that we have to have more conversations around fraud and how can people doing banking as a service and payment processors, how can they build trust? Perhaps that will be the first move to take, that they can certify somehow and show that there are features they have set in place to ensure that fraud doesn't happen, to protect their consumers. I think that might be another thing that solves the problem for, as founders. I think that's something that people should be thinking about, that it's visible. People are able to see the fraud detection and protection measures that you're taking on your product, but also they're able to do real-time disputes in case there's a problem. And then there's a human override. As a human, when you're doing the shopping, you're able to override any payment at any stage in case you feel you're not comfortable with it going through. So I think if people are building technology in this space, those are some things to think about. Make sure that there's some sort of certification that shows that there are fraud detection and prevention measures that your product has. And then there's real-time dispute signals and communication from the customer's point of view, and they have ultimate control, so they can override the payment at any stage. I think those are things that could help.
So, yeah, when you're doing online shopping, scams are always one of those things that you'd encounter. And for me, I've never really been a. I know there are people that like buy things from vendors on Instagram and WhatsApp and places like that. And while I do a lot of shopping online, obviously we all know I'm a big fan of Jumia, so most of that shopping is done on Jumia. Um, but
Jumia need to give you shares at this point. They should just give you shares.
I mean, something to consider, really. But yeah, I do a lot of shopping from places like Jumia. I also do some shopping on Konga occasionally. But that is where I like to shop from, like these e-commerce brands. I don't really know how to navigate the social media shopping landscape. So I've noticed there is a lot of scams that happen on the social media marketplaces. So autonomous AI agents, very, very interesting. It's still the early days of this technology. And I believe Africa is saying we are not there yet when it comes to the trust. But just like any other technology, sometimes it takes time to catch on. They have invested a lot of money, so I'm sure they will be doing a lot of marketing to push it. And over time, we'll get comfortable with it. Not me, but somebody will. Moving on.
Not not us. I think we are very tech averse. How are we a tech podcast?
Moving on to Kenya. Kenya is always very interesting these days because Kenya is coming up with different tax proposals that are quite shocking sometimes. So the story for today is there was a proposed finance bill. There was, because the bill has been killed. The proposal was to get more revenue from the mobile ecosystem by putting some heavy fines on locally assembled tech. Ironically, this was going to be the exact opposite of some of the protections that were built into the Finance Act of 2022. And so it created this very weird scenario where you had incentivized investors and tech companies to build their manufacturing hubs in Kenya by removing some import duties and things like that. And then this bill planned to take away all of that and, in fact, put some heavy taxes on these local factories and assemblers. So there was a lot of controversy, but thankfully, this is where democracy comes in. And once it got to parliament, it got killed there because, I mean, realistically, it didn't make any sense. But Kenya seems to be scrambling at everything at the moment. So what's really going on there? Is it that bad? Because it seem to want to tax everything to the point of destroying protections that were already in place previously, to the point of chasing away investors even. Because a lot of these, for example, companies like M-KOPA and Sun King that have built their plants over there, what happens to them? You incentivize them to come, now they're here, and then it seems you want to send them away. And so, yeah, very, I don't know. I don't know what to say about Kenya at the moment.
Kelvin.
I think going back to what I said a couple of weeks ago, Kenya loves its taxes.
We need help. Send help. We also don't understand what is going on because some of the proposed bills that are coming into Kenya are just ridiculous. This one is just out of this world because they wanted to remove zero rated VAT on locally assembled smartphones, and on top of that impose a 25% excise duty on domestically manufactured devices. Now, that's horrible, but they wanted to do more, right? Like Nigerians, this time, Kenya is doing too much. So they wanted to exempt imported finished phones. Tell me how this makes sense. So the effect would be that locally produced phones would get more expensive while imported ones would be cheaper.
Yeah.
Now, M-KOPA alone employs 500 workers and produces 3.5 million devices since 2023. That means that's a factory closing down. We already have so many that are shutting down at the moment. So that means we close down more factories, we lose more jobs, we reverse Kenya's electronics hub ambitions that we had started building. And you wonder what the government is thinking because I as Africa, we're trying to start producing our own things, selling our own things, becoming more and more independent. And then you want to make imports cheaper. It just is ridiculous. Now, when you think about founders who build on top of these affordable devices and their penetration, things like fintech, edtech, health tech, and you are increasing the prices, you are affecting so many industries in the tech space in one go. So I'm really glad that the bill has not passed. On top of that, I know that the Kenya Association of Manufacturers was making submissions to Parliament. So I do think if you're a company that is in this space, it's also important to join associations because then you get to be on the table when these policies are being made. And one of the trends that we've seen in Africa right now is that there's a lot of policy coming up in the tech world as governments try to catch up with the rate of growth and change and development that is happening in the tech space. We're seeing so many policies coming up. And I do think that founders need to make sure that they are part of an association so that they have a voice when these policies are being made. We saw Nigeria making policies that affected the fintech space, I think 2 weeks ago. Now we're seeing this. It would affect not just the manufacturers, but anyone sitting on that infrastructure. So having voice is quite important. And I do think that some things like associations are things that we should be a part of because policies will keep changing given the rate at which tech is developing.
Yeah, policy will keep on changing, but then this one was a bit out of nowhere. Like you said, normally you would have policies to encourage people to build manufacturing hubs in your country, but then to try to push a bill that would reverse that, now make it cheaper to import than to produce. I mean, this is why it's good to have checks in your government.
Right?
So, so you don't have.
It's like people are smoking something. I'm sorry. Please continue.
Honestly, it felt very strange. Reading the story, I'm like, what are they trying to do? Well, anyways, it's a good thing we have checks and balances in government, so something like this can fly. On to the next tax, I guess.
Yes, on to the next tax. And still on compliance and policy and regulations, now in Nigeria, the Central Bank of Nigeria has issued a directive now that actually makes sense now to some extent. It has issued a directive requiring all financial institutions and payment operators to store and manage payment transactions data that is generated within Nigeria on local servers, and guys have been given a deadline of 1st January 2027. So if you're a deposit taking bank, or you're an MFB, a mobile money operator, or a switching company, payment solution service provider, you're a super agent, and any other licensed payment operator, you are expected to follow this directive, and you have less than 6 months to get that done.
I like the phrase he used to an extent because we have talked about it for some time on this podcast, digital sovereignty and controlling the data flow in your country. So data protection acts. These are things that are picking up in Africa at the moment. So this looks like one of those moves in that direction, and it's good. Maybe the only challenge is the timeline, 6 months, because while it does seem like a long time, the technical implementation, on the other hand, it's a lot of work to migrate all of that data down to Africa. So it would be tough for maybe bigger fintech brands like the Flutterwaves and Co. They may be able to have teams to move all of that data faster. But for smaller fintechs, smaller microfinance banks that don't have dedicated teams like that, it would be tough. So maybe that's the only thing I would say about this proposal timeline. And then, of course, the cost of moving down to local data centers and things like that. It would also be expensive to do all of that. So that's the only thing I'll say. It's a good policy. Maybe the timeline can be adjusted. I imagine it would be as we get closer to the timeline, but this one is just to, okay, guys, speed up. This is the direction we are moving in. And yeah, it's one of the things that happens when you're building in Africa because there is a lot of regulation being done at the moment. So things are always changing. And as a founder, as an investor, it's something that you need to be aware of. Give some allowance for shifts like this. And I guess generally I would say good one.
Yeah, I totally agree. It does bring a couple of questions to mind. First is a question of, is Nigeria ready to be able to host all that data? Things like tier one banks, I think they have the infrastructure to manage that and be able to do that. I don't know whether you have enough centers to be able to host that data. That would be my first question. Are you ready for that? We saw Kenya unable to build a data center here as a result of energy problems. From where I sit, Nigeria has bigger energy problems that Kenya does. I say that with all respect. That's just an observation. So, do
I
you
mean,
actually have the
it's just
capacity?
fact. It isn't an observation. It's just fact.
You know, I have to be respectful. I don't want you guys coming for me. Please, I love Nigeria, but you do have a power problem. So I wonder whether you have the capacity to actually host this data. So that's my first observation. The second thing is, there's a bit of ambiguity from where I sit. Our international cloud providers that operate local Nigerian availability zones like AWS Lagos, Azure Nigeria, does that qualify as compliant infrastructure? That's a question that I ask myself. as you said, it's a really good move. And I do think we have to keep moving in that direction. And whether you're ready or not, the push will cause, they say, necessity is the mother of all invention. So I do think that the push will cause innovation, invention to come up, people to figure it out, more people to invest in storage within Nigeria. And hopefully the policies that are there and that will continue to come up will support that kind of infrastructure being built out. So I do think it's a very positive move. I do not like, I agree with you when you say that you'll probably not be able to do it within that timeline. But I think that push is important because it rallies all stakeholders that are necessary for this to happen to actually start moving.
Yes, it is very important to have this regulation to get people to start moving. So I definitely agree with you on that. I think you asked a question: what does compliance in the sense mean? And I know that we do have a power issue in Nigeria that is well documented, but over the last year that we have been doing the podcast, we have been seeing pushes for more data centers to be built in Nigeria. So that's also something that I'm curious about. Maybe the infrastructure for this is already available. I don't operate in that space, so I don't know. I can't confirm that yet, at least. But I believe that they definitely believe there is enough of the infrastructure done for these fintech and banks to be able to make the move. So we'll see how it plays out. I would speculate that this deadline will be moved as we get closer to it. And our final story of the day reminds me of a meme from Black Panther. One part of the movie where it looked like the Black Panther had died, and then he appeared and said the phrase, "As you can see, I am not dead." This story reminds me of that scene. Chimoni, we talked about them a couple of weeks ago, 4 weeks to the day of the story. So Chimoni has been acquired by Capital Sage, and I remember one of the quotes from the founder's shutdown like message was that he would be holding on to the licenses and the IP and things like that. And it's kind of left the door open for an acquisition like this. And his bet has paid off because Capital Sage is looking into a North American expansion, and this Chimoni already has the licenses for that. So they have gone on to acquire them. So one moment you're dead and the next moment you're alive again. It's quite interesting how that works. I'm curious to see if they would continue to operate independently or they'll be absorbed into one of Capital Sage's product offerings. But definitely, they were building something that was good, kind of like we talked about when we talked about the story. They had this technology down, but what seemed to be the issue was distribution. So this kind of validates that.
Absolutely, Kelvin. You know, I feel like we should do this in Easter because this is a real resurrection story. What? Um, I think it has to be one of the most shocking stories we've ever covered on this podcast. And really happy for him. I remember us laughing about the less than $1 million
The
investment.
funny thing is,
Um,
it still continues to be reported like that.
but I do think he made a couple of smart moves, keeping the licenses, closing down the company, and obviously being quite transparent as to the reason why they were closing down. I also do think that the fact that the infrastructure, the product itself was good, the issue was distribution. For a company like Capital Sage, they seem to have quite a good distribution because they have presence in a number of countries in Africa. They're in Nigeria, they're in Kenya, they're in Gambia, they're in the UAE, they're in the UK. So they seem to have all the assets required for good distribution, probably have quite a good customer base. So the question is, will this be a good addition to whatever it is that they have? And so probably they know how to solve the problem easily. And because Chimani already has a good product, then it becomes easy to solve the problem that they have, which was capital and distribution. So let's see how it goes. I'm also interested to see what you've said about whether they will continue to operate independently or be absorbed into something completely new, or perhaps completely rebrand. Waiting to see. A really amazing way to close the episode today with some good news.
Yes, it's some good news because the initial investors in Chi Money would be getting their returns. Part of the deal guarantees full repayment for the existing investors, something that they wouldn't have gotten from the pure shutdown. And also, the founder of Chi Money would not just be walking away. He would lay the foundation for the transition, relaunch the platform before officially handing over. So it seems to be a deal that is cleanly done, and the vision continues to live on under Capital Sage. And yeah, so I think the moral of the story is if you build something solid, eventually people will see that. In some cases, you get a lot of users, you get a lot of investors, and then in other cases, maybe you hit a roadblock, but then the roadblock is just a roadblock until someone comes to move it out of the way. And it isn't the end for Chimoni ultimately. So it's a good way to end the podcast. And thank you for listening. And see you same time next week.